Welcome to Stock Odds Odds and End podcast. I'm Dave Singh here with Rob Friesen, getting ready for the week ahead. Good evening, Rob. How's everything?
Hey, not too bad. Let me share my screen so we can do a more visual podcast, which is kind of what we're planning on here going forward. We tried it last week a bit, and we'll keep going and getting better at it. So, all right. So can you see my screen okay there, Dave?
Yep, screen's good.
All right. So this was the 1 week performance, and you can see that technology largely dominated, along with communication services, which were more Google and Meta and Netflix that had a great week, where T-Mobile, Verizon, AT&T, not so much. So it was kind of haves and have-nots there. But also consumer cyclical, we had Amazon and Tesla rocking. Now, there is an article out on Tesla, some caveats to its recent performance, like some headwinds that are on the horizon, which I think there's plenty of them. So you might be wanting to look through that more in depth if you're a Tesla trader. The healthcare and consumer defensive utilities didn't do so well. Utilities being one of the worst performers. So it really ended up being a risk-on week. It didn't sort of start like that. Like, we had a little bit of follow through on the open on Monday from Friday's sort of late day rally. And, it opened up and then it pulled back, and Monday and Tuesday were kind of flopping around. Wednesday started to be floppy, but then ended up having a good late day rally, and that continued in Thursday, and also started that way Friday and then pulled back a little bit too. So, but as far as what people were buying, regardless of the debt ceiling issues, regardless of banking concerns, regardless of, growth and whether the Fed is going to pause or whether they're going to keep going, regardless of the inflation banter. There was probably some other things in the mix too. Can't remember them all now, but in spite of that, they wanted to buy tech, and they wanted to buy the money-centered banks for sure, and even industrials, and some oil and gas stocks performed okay for the week. But utilities, not so much, down on average over 5%. So it was a big week that way, and consumer defensive too couldn't get a break. So that was that. Let's look at it from a sector, situation here to kind of show you how dramatic that was. And on Friday, in front of the weekend, energy did pick up a little bit, but for the whole week, it wasn't that strong. And financials were an interesting performance for the week. In spite of being mentioned that maybe more banking mergers are still necessary, which puts the question mark, what other banks are out there that are going to be failing? And is it really a good deal for the bigger, stronger money-centered banks to go out and purchase those, or maybe be forced to purchase those? Anyway, so that's that. Let's roll over to what the futures are doing since they opened here. We have the Dow Jones futures, opened and popped up a little bit here. This is Friday's move that you can see. You can see that Friday was expiration, by the way, and often you have the high, if we open up, set on expiration like that. We open down, the low can often be set. That's one tendency of expiration. It's because of the forces in the options world that are doing their thing, and end up sort of pegging the open at a certain level, and often, like I said, it is the high of the day or the low of the day. So we did pull back and finish down a little bit. but it's trying to move up here so far. Let's look at the S&P 500. Again, improving since it opened, but not out of the woods yet. NASDAQ, the one that was so strong last week and for a number of weeks already with all the tech plays, especially mega caps, up 6.5 bucks or 0.05%. So it still wants to move. And Russell has been the weakest of the four recently, and it's still kind of flatlining here. Let's take a look at the VIX. VIX is moving back up to the 20 level. Let's just flip over to a daily or daily. Here's daily, just to see where we are with that. So not near the low, kind of in the middle of a consolidation area here. I expect volatility to stay fairly muted, even in spite of the controversies and things going on this week until the debt ceiling thing is settled. Okay, let's look at energy. Crude, not near the low, come off it pretty good. Some potential still to move higher here. It's been pretty stable this last week. Let's look at bonds. They pulled back, which means that rates were rising. The yield was moving up slightly this last week. So that kind of argues a bit against a pause. I mean, because we have the June meeting that we're looking forward to. So this move last week kind of argues against that a bit. There's a 10-year, same thing. Let's go take a look at gold, how it's been responding to these things. So the 1950 level, I look at as support, and I look at the 2050 as more of a resistance area. So we're sandwiched between that, and it's holding up okay. And if there's real concerns and problems, we may see a rally on that. I do like looking at opportunity to buy the pullbacks in the gold patch. And silver, same thing. It's in the middle of this consolidation that we had in December to February, and that's a good support level for it to be at. So there's some upside potential on that as well. Copper is the recession metal, whether there's recession or not. It's indicating that it's not extreme fear of that, maybe softer landing type of thing, and could move either way, but this just signals that there's no major concern at the moment. It's been chopping sideways here. And the US dollar, which plays into how the base metals do, especially in terms of negative correlation. It's had a move up here, again, corresponding with the decline in the bonds and the rise in the interest rates. So everything's in keeping there. And it's had this bit of a move for the last week. So certainly could pull back a little bit or just chop around. I don't think we're at a place where there's going to be massive moves in it other than, again, issues with this debt ceiling thing that could change that. But everything gets resolved. It probably will make a lower high and decline after that. Okay, Dave, let's go through some things that you have. I'm going to pull something up on the screen here. And then after that, I want to teach on something that's kind of interested relating to the 5-day swing trade symbols. But first, I'll pull up this. Okay.
Yes,
so can you tell me about the ETFs for this next 5 trading days? Well, this is the last 5 trading days of the month, right?
Yeah, so the last 5 trading days of the month start on Wednesday because next Monday is Memorial Day holiday. So this Wednesday, we have 3 days this week and then 2 days of next week. So of the ETFs, which are expected to do better or worse during this period, it's really a lot of the risk on NASDAQ stuff. We have the SOX, which is chips. SMH is also their chip ETF. ARKKK, that's your high beta, high growth, XLY. We also have retail in there, XRT. So a lot of the growthier stuff is expected to do better than things like materials. On the weaker side, we have oil, USO, XLE, and gold. So weakness in materials and gold and oil, and stronger in technology and high beta. But of the last 5 days, it's days 1 through 4 that are more robust, where you can expect these ETFs to do better than not. And the final days, it's a weak day. It's a little bit weaker. It tends to sell off that final day. What's the next slide?
Yeah, okay. So just a question on this is, looking at the pullback that we had on gold and that corresponding GDX, GDXJ. So I would lean on what this is saying going into those last 5 days. So maybe the next 2 days, could be a bit different than this because we've just had a good risk on week. So we might have it, just kind of take a bit of a pause on some of these and rest. SMH, I know that there's a deal, something going on with Micron. So we're in a bit of trade wars here with China. And so China said that Micron chips are not secure. So this is kind of a backlash thing. That might impact SMH and SOXX. So I want to flag those right now just because of that weekend news with Micron. So let's be a bit cautious here.
The other thing that can affect SMH and SOX this week is earnings on Nvidia, right?
Okay.
So that could also dictate how we do. That's going to be midweek this week. So
now, if I was conjecturing, I would say Nvidia probably is going to be strong. Now, again, with earnings, it's the context of how you get there.
Mm-hmm.
So you're coming up to earnings. Is the stock already, pricing everything in? Is it just on a rampage up? If that's the case, then I would be really cautious for the actual earnings event. If, on the other hand, it's channeling, it's sideways, or it's at a discount, then I wouldn't be as concerned. But you are good to point that out because those do factor in. I'm just thinking of like Nvidia in the current AI,
Mm-hmm.
self-driving car, all these areas that Nvidia is plugged into. Pardon the pun.
I mean, you look at the chart from January; it's a straight line up, and we're at the high end of that range. But it's got AI at its back, and it's like the new Tesla. It's the most loved stock.
Right, but I mean, it could be, it could meet expectations that are you've seen priced in, and still drop just because, well, it didn't need it. Right,
Correct.
That's always a potential problem. But anyway, so we'll say like this is what the seasonality suggests. There could be arguments against any one of these, right? Same thing with Gush and XOP and just the commodity area here. So what this is saying is that generally at the last 5 days of May, we have technology and discretionary that performs well, and commodity-based stuff and more defensive stuff performs poorly. Okay, that's what the theme is showing us here. But then what is the macro saying? What is the news context? Does it agree or disagree? Or as we approach the 5-day window, what is really out of line compared to what's being suggested? So for example, if we get a massive rout in SOX and SMH in the next 2 days ahead of the 5-day window, then I might be looking for, a nice discount and actually find a good price. It could happen on Wednesday, the first day of the 5-day seasonality. Could find a good opening discount on some of the semis or the ETFs in general here, and that might be the play, right? So, take everything with the context, and not put all the weight just in seasonality, but really be balanced about that. Okay, I'll go to the next slide here. So this is the last 5 trading days of the
Yeah,
month
that's
for, say, the
showing the last
Qs.
5 day
Yeah,
versus the 3 day. So
right.
of the last 5 days, it's really that days 1 through 4 that
Yeah,
are more robust. The last day is kind of a deleveraging day, and the Qs really are expected to do quite a bit better than the spider. And I'm looking at the SMH versus the spider. That's even more robust than the Qs. So the last 5 days for the SMH is plus 2.72%. The last 3 days is 1.89%. So um, that's what the almanac says. It's really strong in chips normally.
right, right. Well, I mean, this last trading day of the month being down for the Qs and the SPY is in keeping with what generally happens, you know, 9 out of 12 last days of the month for the year.
Mm-hmm.
Like, of all the months, 9 of them are showing this way. So May is one of those. Just out of curiosity here, we have let's just take a look at what the Qs have actually done for the month so far. Pull that up there, Dave.
Okay.
So the Qs and the SPY. So what have they done month to date?
Let's see. The Qs. It says for the month 6.4%. I'm trying to find month per date.
Well, for the month of May so far.
It's showing 6.4% for the Qs.
So it exceeded what was expected. So here, I mean, this is the whole problem with, and we talked about this before on a podcast, Dave. We said the sell in May and go away thing is something they like to put out there and sort of, scare people and think it's news and stuff. And that's not what our data showed typically happens in May. It's more robust than that, and it wouldn't surprise me if the opposite actually comes through. And what have we been seeing for some of these mega caps? They've actually been buying them.
Mm-hmm.
Look at what Meta's done. Look even what Tesla's done this month, right?
Mm-hmm.
So yeah, it's very interesting, right? The media sensationalism and what really happens. So that's why I like being data driven. And again, there's a balance between the stats and maybe the macro that's currently in play too. Okay. And the last image here we have is what's actually happened here on these ETFs.
Yeah, it's just showing like on the week, a lot of strength in the tech and a lot of weakness in the classic defensive things like utilities and staples and healthcare. So it shows a risk on backdrop for this past week. Yeah.
Yeah, well, so there's the Qs. We've got year to date at 26%, and for the month so far, 6.4, as you said.
Mm-hmm.
So, and then look at XLU. It's been bad all the way through this year so far. So certainly a very different year than what we had in the last quarter of last year. The utilities were doing pretty well, right?
Mm-hmm.
So actually, no, it was the summer and into September and stuff. The utilities were doing really well. They actually started to sell off at some point in the year too. But there's where the mean reversion comes in. So we see some excessive performance sometimes, and that just turns over and changes.
Mm-hmm.
Anyway, let's go to look at these charts that I was going to show you here. Okay, we're going to talk about it with Josh on Wednesday, I believe, more in depth. But I wanted to show something here. So I'm just going to go through the long candidates of our 5-day swing trade. But what I want to point out is what happens with signal to noise and gaps on the open. So look at CHX here. So it had a nice move up off of the Tuesday low. And then on Friday, it gapped significantly up. Okay. Now, a lot of people, when something is gapping up like that, they think it's going to continue to go higher, right? They don't know what to do. If they had to buy it or something, they wouldn't know what to do. In this case, it was one of the longs, and it would have been an opportunity to sell it. So in hindsight, you're looking at this and going, well, that would have been a great opportunity to sell. So again, it's expiration morning. A lot of things are opening, and that might be the high of the day or the low of the day or whatever. In this case, it was the high of the day, pretty much, and it pulled back. Great opportunity to sell and lock that profit. But how it gets to that gap is the context that I need to try to communicate here. So this gap was, significant related to how it normally moves, and it was after a long, a long move up already. So this would not be an occasion to go and buy that particular stock with that type of gap. Okay. On the other hand, it could be an opportunity to sell, and it shows that it was. Now let's compare that kind of a gap with this one down here, CTLT. Now look what happened here. This was completely sideways, and then it had an earnings event. So it had a catalyst, and it gapped up out of the channel. Now that's a very significant gap. But why would this be more of a case to buy than this would have been on a gap up? It's how it gets there. It's the context of how it gets there and what it's been doing before that. So this was doing absolutely nothing. Then it has an earnings event and it gaps up significantly. You got to think about whether there was a lot of short interest, who's getting squeezed, who says, "Oh man, I didn't realize that thing was on fire with earnings. I'm going to buy that." So this would be an argument that it could be something that's go with, even though it's a big gap like that. This here is high signal, low noise, right? Trends. So if you're long something like this, you don't want to sell it when it's doing that. You want to wait for this type of event, a gap after a long trend. That could be all she wrote. That could be the end of the move. Okay. Here's a situation on IFF. Came off the bottom on Wednesday and starting to build. So if you were long it, it wouldn't be a situation that you'd want to sell right away just because of how it's coming off the bottom, and it's essentially mean reverting back to where it came from. So if you did pick up another layer on this, or you had your first layer and you get back to break even or a little bit of profit, not necessarily, a good time to take it, just because of, again, the context of where it's come from and how it's gotten back up to that level, right? Here's another case here of Tuesday's low and nice signal to noise ratio all the way up to Friday's gap open, which wasn't huge, but still, again, it would have been a great time to sell it. So a nice long trend on SWK. So just be mindful. Look at how different, look how different this is, HIW. This is chop. This is, volatility, choppiness, nothing to really sink your teeth into as far as trend. Very different than this COHR here, and very different than SWK. Okay. Here's another one, Twilio. So a nice, trend up as well. You've got some moving averages for reference if you want, but again, doesn't really pay to take profit. This was a profitable trade because we got in at the open down here. This was very profitable, but it doesn't pay to take it off when the signal to noise ratio is, so robust and there's no big gap or, number that you've hit or whatever. Now, another thing is Wayfair here. It came off the bottom that it hit on Tuesday, and it got up to a high here on Thursday. And then Friday, it actually opened down and started to sell off. So that could be another flag for you for when to sell something that you're profitable on, when it, didn't continue the trend or didn't have a gap up, but the reverse happened, it gapped down and something's going on. So it just didn't give you any real bounce at all. So just bear that in mind. Just trying to give a few examples of, if you want to do some swing trading, this can also apply intraday for you for some of your trades open to close, but the signal to noise ratio for sure. But on the gaps, that's something that you're probably going to be dealing with if you're in a swing trade and you have it occur either gapping in your favor or gapping against you. Remember, how did it get there? How much of a gap, is at the end of the move? These are things you want to be aware of. So hopefully that provides some insights. Any questions, Dave?
No, that's good stuff there. I
All
do
right.
have economic reports and earnings to talk about real quick.
Okay. Do you have anything to show on the screen on that or not?
No, it's just in general, the themes of the week are some Fed speak on Monday or Tuesday. We have S&P services and manufacturing on Tuesday as well. Wednesday is the FOMC minutes, and then Thursday, Friday, there's home sales data and some inflation data and personal spending. So again, it's how the consumer's holding up and some Fed speak, and housing is the theme. And the key earnings for the week, on Tuesday, we have Lowe's. That's going to show us how people are improving their home still or spending money on the house. And then Wednesday, NVIDIA. So that's going to affect the chip sector and AI stocks. And on Thursday, Dollar Tree. So how the lower end consumer is holding up. So those are the main earnings that are out there, and economic reports.
Okay. And Monday's a holiday for Canadian stock markets. So that means things that are dually listed, they trade on both Toronto and New York. You don't have them obviously trading on Toronto. Also, Canadian institutions are offline, so that may reduce a bit of the volume that occurs on the New York NASDAQ market. So keep that in mind. Could be a little bit of a light volume day. We've still got this debt ceiling overhang because we had a pause on Friday regarding the discussions, and I think they were supposed to pick up some of it tonight, but obviously we don't have any more news. So I know some of the markets around, well, China's actually probably going to be okay, but some of the other markets might be softer as they're waiting for the debt discussions to resume and see where we are with that. So, all right. Well, thanks for listening in, and I hope that helps with us showing a little bit of stuff on the screen. All right, Dave. Have a good trading day tomorrow, and we'll catch you later.
Good luck. Thanks.